Hey everybody, happy Easter. Today is Sunday. It's 420 for those who participate in that other so-called holiday. But let's take a look here, get this screen shared. We'll start out by looking at the futures and what we have going on here with the S&P 500 and the Nasdaq. You can see that we gap down. So, when we see gaps in the S&P 500, it doesn't always mean that the market gap down. A lot of times it means that the market, the futures traded lower during the night. But, lately we've been seeing a lot more gaps in the futures themselves. So this is where we closed Friday, and or Thursday rather, because we had a long weekend. Hope you enjoyed your long weekend. And so we gapped lower, and we're just kind of chopping back and forth above and below the daily volume weighted average price. That, of course, that blue line will become the new week-to-date volume weighted average price. We started from the very first moment that the futures start trading on a Sunday at 4 p.m. my time. So I'm going to talk in my time. We don't always have to talk about the East Coast because they're not more important than where we are, where I am. Anyways, the on the left-hand side, we see the hourly chart. And on here, we've got that 5-day moving average, which is a red dotted line. You can see we're below that and it's declining. Same is true for the NASDAQ. What we're seeing right now, the most important level that we're seeing right now is the anchor off of the low that we saw this year. And that was, of course, that big gap lower. We saw a big reversal and, huge rally that particular day. So we're holding above the anchor from the orange anchor, which is from the announcement of the tariffs. That is in the S&P and in the Nasdaq. And in the S&P 500, we don't need all of these necessarily right now. They're just to kind of reference. We could probably take this red one off just to make it a little bit easier to see everything else. And I'll do the same right here on the Nasdaq. But the black one, it was the pause of the tariffs. So we're going to keep that on there because that still has the potential to become resistance. This was last week's high. But the most important thing, as I was saying, is the anchor off of the low. This is the year-to-date low. This is the month-to-date low. It is the low for 2025. And that's where, if you recall, we were in a bear market on that day. That's the day that the media said we're down more than 20%, so it's a bear market. And as soon as the media said that we were in a bear market, what happened? Well, the market ripped higher. That's the way the media works often. And I pointed that out in a tweet last week saying, when we were down 10%, we went down 10.26% or something like that, and we were officially in a correction. The market rallied 5% in the next 3 days. This time, as we were down 20%, we were actually down 21 and change intraday. The market rallied 15% in the next 4 days. So don't listen to that stuff. That's just marketing. It's just hype. It means absolutely nothing. What we need to look at and listen to is price action. We got a bounce. That bounce seems to be petering out here. We're testing the anchor from the low in the NASDAQ. You can see that right here. And just like any level of support, the more time support is tested, the more likely it is to fail. And when it fails, it seems highly likely to me that the next case of what we'll see happen as we move over to TC2000 for the equities charts is that we will see a continuation lower. So let me just, that was someone was asking me about that stock. I will talk about that here in a moment. But we'll start with the SPY. So if you didn't watch my weekend video, I'm not going to repeat everything I said there. But here is the most important level this week, which is the anchor off the low. Now, if we break below there first thing Monday morning, don't chase the market lower. Just like you don't want to chase breakouts, you don't want to chase breakdowns. So instead, if it breaks lower here, don't be the sucker who sells short. Wait for it to do something like this and then sell short here with a stop above that level. The market is making a pattern of lower highs and lower lows. We've reversed this little uptrend. We're below a declining 5-day moving average in the S&P 500 and in the NASDAQ. So we've got to look at this market and say, we're guilty till proven innocent. This is where the sellers have the ability to gain control again. What I'd really love to see is that, not because I'm an asshole, but because this is how markets form bottoms, is that we go down and undercut this level. Then we get our next bounce, maybe up towards here to the 20-day moving average again, and then another failure. The bottom line is we are below the 20, 31, and 42-week moving average. We are guilty till proven innocent, just like we were over here and even over here. The bottom line is we're going to continue to see rallies, and so far it's not looking like we're going to see a rally tomorrow, but anything can happen overnight. Maybe we do something like this even before we hit that low. I'm not here to predict things. I'm here to say, what's the path of least resistance? We're below a declining 5-day moving average. We're guilty till proven innocent. We're below a declining 20, 50, and 200-day moving average. Odds do not favor a big turnaround here. So I'm not, like I said, going to repeat everything I said in my weekend video. If you want more information about what I said over the weekend, that is on Twitter. It's also on YouTube. Let's take a look at the stocks. First of all, from Alpha Trend subscribers that they're interested in looking in. JP Morgan. I've made it very clear about JP Morgan how I feel about this stock. And here, you can just look at the drawings I've made. JP Morgan is a stock that is basically rolling over here. We've got that 200-day moving average still advancing slightly, but I think that we've made probably a head and shoulders pattern here. If we look at the weekly chart, I've made it clear week after week, the last 2 weeks in a row, that we have a pattern that has been interrupted. Those higher highs and higher lows are now lower highs and lower lows. It's guilty till proven innocent. We got a little bit of a bounce this week off of earnings, but here's what I'm looking for. I actually explained this in the weekend video, so I'm not going to talk about that one anymore. Sauna Trader wants to know about AT&T. As I've been saying week after week here, today's relative strength is tomorrow's sell candidate. AT&T looks like it made a higher high and a higher low. Now we have the potential that this is a lower high, and we've come down twice to the year-to-date anchor. I think the next time we come down in here, we're going to break below it, and the AT&T is the next debacle in this market because it's had this huge rally. It's not immune to selling. No stock is immune to selling in a bear market. So I don't like AT&T at all. It's, if you're looking to buy AT&T, buy it above here with a stop there, and probably expect to get stopped out. Qualcomm is a broken stock as well. This one, it was actually 2 weeks ago right here. I said it looks like it's hanging on the edge of a precipice. It broke down. Now it's getting ready to decline once again. It's having a little bit of a battle with the anchor off of the low, and that's this level right here as well. When you look it out to the weekly time frame, I've spoken week after week about this one as well. It looks like it's ready to head lower again. It's just a little bit inconsistent here on the intraday, and on the right is the 30-minute time frame with a 5-day moving average. That 5-day moving average is calculated with 30-minute periods, so it's not a 5-period moving average. It's a 65-minute period. 65-period moving average. I think for Qualcomm to break down, we want to see something like this. Short it, here with a stop above that level. And I'm going to go through these pretty quickly. So if you've got questions, please type them in. I will look at my Twitter as well, where this is being live broadcast right now. But I'm always going to look at the comments from Alpha Trend subscribers. DRS. Today's relative strength is tomorrow's sell candidate. It's holding up very well here, but I also look at this weekly chart, and what it seems to me is we saw a rally from 26 to 38, back down to 30, back up to 38, made a lower low. Is this going to be another lower high here? It's very choppy. I don't know. I don't see how you would want to trade this stock, but if you just ask yourself 2 questions, where has it come from? In the last week and a half, it came from $28 a share to $36 per share. So in other words, it's rallied 8 points on a $28 stock. What is that? 25, 26%. So where has it come from? It's come up 26% uninterrupted. Is this the type of stock, in a bull market, maybe it can continue, but we're seeing lower highs, and each time it's seen these extended rallies, it has gotten the shit kicked out of it. And, why would you expect it to be different this time? I would expect that it's going to fail and probably come down and test the anchor off of this low. It's definitely not one that I would be interested in buying. Amazon's another one I've spoken about at length. We're nothing has changed here. It's guilty till proven innocent. I spoke about this in the Friday video. Lower highs and lower lows. We're below the anchor from the year-to-date low. Most stocks are not below that. This one is particularly weak. If anything, you want to look at this stock and say, okay, if it rallies up here, fades a little bit, then to short it with a stop above there. But Amazon is guilty till proven innocent. CELH, it's had a beautiful rally, but it still has a declining 200-day moving average. I expect this thing to roll over here. I don't know why it's holding up so well, but also if you want to trade this stock, it is super volatile in here. These are just some ginormous volatility. Now that volatility seems to be maybe calming down a little bit. This could be distribution looking for a decline back down. I would not be looking for further upside in this one, and I could be 100% wrong. But I look at it and say the stock just rallied from 21 to 37. It just rallied basically 150%. If you're looking to buy this stock right here, right now, you are clearly very late to the party. And if you're going to buy it, you can't do it, of course, on a daily time frame. You have to look at it and say, okay, maybe I buy it above this high with a stop below there, because if it breaks down, maybe it's going to do this. Definitely not one that I'm interested in. And you know what? That's just the market we're in. I've said, I was pinned down last Tuesday by my friend Sean at Trader TV, and he said, Brian, just give us a trade to talk about next week when we come back. And I said, okay, Sean, here's what it is. It's short the S&P 500. And that was on Tuesday. That was over here. And that's where we are in this market. If you're looking to buy stocks, you're looking at the market, you're doing a handstand, you're looking at inverted charts or something. I don't know what it is. MFC being asked about as a short candidate, which is nice because here's a stock that's breaking down. I've spoken about the XLF. The financial stocks are breaking down. So every component, MFC, JP Morgan, Goldman Sachs probably looks the same. So does Citibank. They're all broken. They are guilty till proven innocent. So these stocks are not ones clearly that you want to be a buyer of. And that was MGC, MFC. The only thing is that we've been finding this one probably isn't as good of a short candidate because the 2-year anchor continues to find buyers for whatever reason. Maybe it comes down, makes a lower high, and then the juicier short trade comes in at that point. Scott is asking about 3 different stocks, so I'm just going to take his first one, which is Costco. Costco is in a choppy uptrend, but it looks, the weekly chart, it looks a lot like JP Morgan, JPM. Higher highs and higher lows over here, lower highs and lower lows. Now Costco, maybe things are going to change here, but I see this high and a lower high. I see this low and a lower low. I think that, Costco is probably a very crowded trade. Everyone's thinking this is going to be great because people want deals and they want stuff, because of these tariffs. But where has it come from? It's been in this huge uptrend, and you're clearly not new to this trend. It's behaving well overall, so it's not a short, but it's, in my opinion, it's not a buy either. So if you're going to buy it, though, it's your money. Do what you feel is right for you. Here's what we see. I would want to see a little pullback. If it held, then buy it here and set your stop under there. But otherwise, it might end up doing this like so many other stocks are. Palantir, I'm not going to talk about. I've been talking about that one every single day. If you don't know my opinion, then you clearly have not been paying attention. Fubo is just dead money. It's sitting here doing nothing. It's a complete waste of time, the way I view it. It's been stuck with a declining 20-day moving average. Above that, we have a declining 50. It's just dead money. If it gets going, then maybe it gets up to 3.5, but that seems like a long shot. If we were in a bull market, it probably would go to 3.5, but we're not in a bull market. We're in a bearish environment, so it's probably going to fail. TTAN, Titan, ask yourself, where does it come from? Just a week and a half ago was 80. Today it's 120. It just rallied 50%. You can't buy this stock. It's way too late. You are not new to this trend. This is not, you didn't just discover something exciting that has the potential. Do you think it's going to go to 150 next week? 130? I don't think so. I mean, the pattern is still there. We have higher highs and higher lows, but it's certainly stretched. And this might be the lower high right here. And what would seem more likely to me is something like this. It seems more likely at this point we would break down a little bit, maybe rally off this low and then make a lower high, come down to the anchor from the low. But you're clearly, late on this one. MBOT, I've been trading this as a day trade all last week. I mean, day trade it then. I mean, I don't have any advice on this stock. It's a crazy little $2 stock. I don't see any advantage to trading this stock. It's if you're having success day trading it, then that's what you ought to do. I would just say that it's getting quite extended here. It's just rallied from a buck 40 to 260. So again, another 50% mover, and the pattern of higher highs and higher lows is starting to turn sideways. I think it's likely that it's going to do this. That seems most likely to me in this type of environment. And again, I'm not trying to, like poo-poo every idea that comes up, but they just do not look good. I'm looking for, here it is, the chat from StockTwits, and I thought I had it open. Let me just reopen this, go to it, and let me see if there are, how about, and I've got some good ones. I already spoke about Costco, so that's good. What about junk after UNH? I don't know what that means. Johnson Johnson. Johnson Johnson just looks like it's stuck in a range here. If you see something exciting, I mean, look at the weekly chart of Johnson and Johnson. It's just a choppy mess. I don't, from a swing trader's perspective, I don't see how that is of interest. How about INOD? INOD is another stock that's breaking down. It's below a declining 20 and 50-day moving average, year-to-date anchored VWAP. It's trying to hold the 2-year anchor. It looks like dead money. If they don't scare you out of these types of stocks, they'll typically wear you out. I spoke about Tesla in the Friday video, so I'm not going to talk about that again, in spite of having 3 requests about Tesla. Look at my Friday video, please. It's there. I spoke about it. How about Unity? It's a broken stock below a declining 20 and 50-day moving average. Prior support tends to act as resistance. That's where we are right here, right now. If it breaks below the anchor from this low, then I would think that it's highly likely we start to see another leg lower in Unity. We're in a bearish environment, everybody. Intel is one of the worst stocks of the last 30 years. It's done absolutely nothing, 25 years. But Intel is a garbage stock in a downtrend. It's been having trouble with the declining 200-day moving average. And this is what I mean with Celsius, is that, when we have a declining 200-day moving average, eventually these rallies fail. That's just the rules. That's how it works. NBIS, this is a broken stock in a downtrend. The average price that this stock is traded at since it's come public, this is the anchor from the IPO, is up here at 31. That means the average person is down 10 points in here. You'll likely get some bounces that look like this, and then they fail. But it's a broken stock in a downtrend. If you look at the 15-minute time frame, you can look at this and say maybe we've got the possibility that we can make a push up towards that 23. If you get that type of move, don't think that you found the bottom. Instead, look at it and say, okay, I got lucky on a stock in a downtrend, and it's likely not going to hold. LYFT. Lift, a broken stock in a downtrend. Just a beautiful pattern here of lower highs and lower lows. A trend once established is more likely to continue than reverse. We've got a declining 20, 50, and 200-day moving average. Lift is just garbage. There's no reason to own these stocks. Maybe it settles down in towards this level. If they don't scare you out, they will typically wear you out. These are all broken stocks. Again, I'm not trying to be the negative guy here. I'm simply showing you that stocks are broken. We're in a bearish environment. INSM looks like it's coming into, we saw a strong decline. Let's take a look at the anchor off the peak. And here's the anchor off the peak. That's tied with the year-to-date anchor and the 200-day moving average. You look at where it's come from. It just rallied from 61 to 72. It just rallied 13% in a week and a half. I would expect that it's likely to encounter supply somewhere up in this area, maybe even makes it all the way to the 50-day moving average, but then it's likely to come down and test the anchor off of these lows. So if you're long, know where your stop is. If you're looking to get long, I think you're late. And again, this is the market we're in. It's not up to me to these aren't my opinions. This is me listening to the message of the market. Toyota Motor, why would you even trade this stock ever? TM. Let's just look at the daily chart by itself isolated. Every single day you get a gap. Why? Because it's a Japanese stock. It trades in Japan when we're asleep. So if it's up 5% in Japan, well, then it will gap up 5%. If it's down 5% in Japan, it will gap down 5%. It's too difficult to control risk. Prior support tends to act as resistance. Where have we come from? We've just come from 155 up into 175. So we just rallied 15%. Where does it come from? Where does it have the potential to encounter a source of supply that might be strong enough to act as resistance? You're basically right there, 180-ish. So then when you answer those questions, where does it come from, up 15 or whatever percent I just said, and where does it have the potential to go, maybe another 3 or 4%? Is the risk of a new position here worth the reward? No. If you're currently long, then be aware that the pattern is still here on the short-term time frame of these higher lows. Don't be complacent. We're coming into a potential area of supply. So if it starts to break down like this, you got to get the hell out of the way and say, let's say you bought it over here. Take your profit. Let it come back down. Let it rebuild. And then buy it over here with a stop under there. Don't be complacent. Let's see. Again, I'm not talking about Tesla. I've spoken about Tesla pretty much in every public video I do, and I did so on Friday as well. Apple, so we short all of them. Pretty much bear LOL. I mean, you certainly don't buy them unless you're looking for a bounce. If you're looking for a bounce trades, you can buy them with tight stops, but we're in a bear market. Of course you don't want to buy them. Why buy stocks in downtrends? It doesn't make any sense. And again, don't shoot the messenger here. NMAX. I mean, how can you look at this thing, seriously? It went from 10 to 260. It's down at 25. It's just, it lost 90% of its value. Let's look at it on a 15-minute time frame. So here's where we were 5 days ago. That means the 5-day moving average is going to start to rally if we're somewhere in here. Maybe this can tighten up and you get a trade in it. I mean, this is a day trading stock. This is not a stock to ask me about on a Sunday night and expect that by Monday morning, anything I say is going to be relevant. This stock might gap up to 29. It might gap down to 23, or it might just do this, that, and then that. That's the personality of this stock right here. Micron. What about Micron? Micron is looking, near term like dead money. Overall, it's just a broken garbage stock. And why do I say that? Because look at it. This stock, was lower highs, more repeated tests of support, and it's just broken. It's dead money. Leave it alone. If they don't scare you, it looks almost kind of like this over here. So maybe you get a little bit of a bounce. Don't get excited if it does, because it's more likely to do this after a bounce, and then maybe go sideways a little bit. And then in a year, maybe it starts moving higher, and then you can look at it with a level of seriousness that perhaps it can go higher. CHA, I don't know that name, so let's take a look at it. I guess it's not, it's not a thing. Maybe that's precious metals isn't a question. I thought it was buy low, sell high. Not on a bear market, it's not. In a bear market, what does buy low and sell high mean? Try to get lucky on these bounces, or sell weakness after the strength and participate in the downside. Rocket Lab, how about Rocket Lab? Everyone's still, and the stock behaves better than the average stock. It's holding the 200-day moving average. That's a bonus for it. It's, here's the anchor from the all-time high. We just bounced up towards that. Let's just color that red so it's a little bit easier to differentiate what that means. And we've got the year-to-date anchor. So we've just rallied from 15 to 20. That's a 33% move. Where does it come from? Where does it have the potential to find supply? Right up in here. So, if you get some continued strength up into here, raise your stops if you're one of these perma bulls on Rocket Lab, because it's less likely to do this and it's more likely to do this and come down and maybe rebuild over here and then continue higher. But after a rally like this, it's likely that it's going to fail. ACHR, broken momentum name. This is last year's news. This has got nothing to do with this year. It's a broken stock with lower highs and lower lows. If they don't scare you out, they will typically wear you out. Kind of like they did over here after this big run. It took a year and a half to go sideways, then maybe it moves higher. APPS, broken stock, if they don't, and this is where a lot of these momentum names that broken momentum names that people are asking me about, these stocks are over here, and this stock, maybe they're starting to wear people out, but you still see this failed rally, a lower high, a lower low, a lower high, lower low. Maybe it does this and starts to, do something, but it's a broken name in a broken market. And that's the market we have, everybody. Look, the futures are down right now, or they're coming back a little bit, but the futures right now are down 1/4 percentage point. The path of least resistance overall in this market is lower. We will have rallies. We will have bounces. So you should look at most of these rally attempts as bounces in a downtrend, because that's the primary trend. When they start to turn, I'll be late. I guarantee it. I will be late to the turn. But I'm not going to be the person who buys every time thinking down here that I've got the low. Because as long as we have these longer term moving averages declining, I'm not going to trust it. Now, on a stock like APPS, maybe we're going to start to do something like this and turn sideways and then perhaps head higher, but it's still not even there quite yet. How about, I've just had 2 people ask about AVGO, and AVGO, look, if this is last year's news, 2 years ago, 3 years ago, big rally. Now it's a broken momentum name with lower highs and lower lows. There's nothing here indicating that's about to change. Maybe this is a higher low and it gets a rally up towards here. If it does, be very careful with it, because we've got the year-to-date anchor. We've got the anchor from the election. We've got the declining 50-day moving average. But when you look at a 30-minute time frame, here's what I see. Here's the anchor off of the low. Okay, that's the day the market made a low. Let's look at stock, from this low. So maybe it does something like this and then rallies up to that one. But I think it's more likely it does this. These stocks are in downtrends. They're below declining 20, 50, 200-day moving averages. They are guilty until proven innocent. Again, don't shoot the messenger. We'll talk about it again next Sunday. Meanwhile, subscribe to me on Twitter for $10 a month, or wait every week, and we can do this again next Sunday rather. Happy Easter again. Have a good night, and good luck in the markets this week.